Well, we've been seeing some pulling back on the Kenyan market this week after last week's close enough to 4% gain. What's your view on the market's picture? Because consensus seems to be that pullbacks we do see will remain shallow ahead of the slew of earnings reports that we're expected to see hit the market soon.
Well, that's true, but then again, I would think it's more of a mixed picture because, like we've been saying, we don't really expect industrials to perform that well. So you might see some sort of readjustment when it comes to industrials and some other stocks. But for other stocks such as those in the banking sector, basically the financial sector. And some in the commercial sector, you might see, I mean, the investors still expect good, strong results. So there's every likelihood that prices will still keep gaining.
Let's take a look at KPLC because it's a company yesterday that really stole attention. It had its rights issue oversubscribed by just over 3%. What's your take on the level of interest that this rights issue received? Because to bear in mind here is that the issue was underwritten in part with two institutions agreeing to take up 50% of the shares on offer in the first place.
Oh, that's true, but at the same time, if you went back to December last year, there was quite a bit of capital raising initiatives in the market. So there was stiff competition. All but one, I think, managed to raise the amount of capital they needed, and therefore, in my opinion, they did pretty well because by far they had the biggest issue on the table. That was about 9.5 billion. Competing closely to government's requirement at that time, it was about, I can't remember quite well, something between 12 and 15 billion Kenya shillings. So the fact that they were able to raise that amount, I was expecting maybe 90% subscription. So for me, they exceeded expectations.
To the extent that we've got them pretty confident at this stage of the game. Kenya Power eyeing now the bond market after that $120 million cash call. What are you making of that new news and its plan to raise capital even further?
Well, the restructuring of their balance sheet now allows them to raise more capital. They're probably leveraging up, which is, I think, a good idea because it keeps their costs of required rate of return lower. So that's welcome. And with debt, I know you are likely to see oversubscription as well. So going forward, it will offer a new avenue for investment. And probably deepen the bond market as well.
Would you be a buyer at this stage? And if so, I mean, what's the fundamental reason, some of the fundamental basis for your interest in a stock like KPLC?
KPLC is a good stock in my opinion, simply because on a business perspective, its costs are well controlled, but it has pricing power as well in the market. Partially because it's a monopoly status, but there are also other factors that come in as well because of say demand, increasing demand in the economy, and of course as they expand their outreach in the reach in the country, you expect that they will be able to sell more. Thereby putting their fixed assets into more use, sweating their assets as they ought to, and basically I think that'll offer good returns for their investors in the long run.
Just taking a look at short-term share price movement on KPLC, we've got that counter trading at 23 shillings 50 right now. The rights issue being sold, or those new shares being sold at 19 shillings 50. Are you expecting to see a steady decline in that price until those new shares start trading on January the 24th?
There could be some slight volatility maybe in the first 1 week that the shares are introduced into the market, but taking cue from previous rights issues, say for example KCBs, the price that was traded there after the rights issue was fairly higher than the price that was trading during the rights issue. So that tells me that the demand and supply of the shares is not really an issue. The real issue is valuation of the stock.